And you know who we got coming up right now? We have somebody I just saw like 2 days ago, Mr. Gareth Soloway. How are you, Gareth? Good to see you, my friend.
Hey, good to see you as well. Thanks for having me.
No, it's great to have you here on the Trader Summit. I know you're not a stranger to our community, but you've been at our bigger events that we've put here before, and we've had here before, and it's really great to have you here, especially because I can stroke your ego a little bit and tell you what a great call that you've been making, like hell bent on being bearish Bitcoin, from the 50,000 and up range, looking for 20K. You had a lot of doubters out there. But anyway, I just stroked your ego, but we got more to talk about than just that. We've got, the current market environment, but I do want to say that if you want to know about Gareth, he's would you say you're the founder and CEO of InTheMoneyStocks.com?
Yes, CFO of In the Money Stocks, but founder. Yes, correct. Yes.
Well,
And then also verifiedinvestingcrypto.com.
awesome. Well, speaking of crypto, we were having this conversation the other day with Mr. Anthony Crudelli, who will be here, I believe, on Sunday. We were talking about cryptos, and I have to say the volatility has kind of been zapped out of those. I mean, we're still getting some moves, but really we're in a pretty tight trading range. How do you feel about Bitcoin now? I mean, are we basing go back a few years ago, we based before we made another rally, to new highs, or are we basing for another fall? What do you think here?
Your downside. So check us out. So we have this trend line going back to basically May, and it beautifully tags this line multiple times. And if you look at where Bitcoin currently sits, I mean, it is knocking on this door. Now, basically, you could say it's hit the door 1, 2, 3, 4, 5 days in a row. And I'm in the camp that I think we are going to push through. I think some of the macro developments today, like the Bank of Japan intervening, we saw the dollar yen start to collapse a little bit, the dollar's weakening. That's all positive for maybe getting a breakout in the Bitcoin chart in the near term. The only thing I would say, though, is just keep in mind that within this short-term breakout, we still have a channel, which would be known as a bearish kind of channel. And I want to just show this here, is that you have this pattern, right? So even if we break out above this line, and let's say we rally to 25,000, you're still in this longer sideways choppy range, which to me is still on the bearish side. So overall, if you had to quantify it, it's very near-term bullish, but mid-term still bearish. I still think we have further downside to go.
So what do you think has to happen in order for us to actually bottom? I mean, I know there's people out there that are sitting on the sidelines. They're like, hey, I believe in crypto. I just don't know when the right time to get in. And also, I guess with that, a second question to that question is, where in crypto would you be? Do you start buying some of these crap coins, shit coins, excuse my language, altcoins, whatever you want to call them, or do you stick with some of the bigger names? So what are your thoughts there as far as where's the bottom, and what would I buy if I'm a crypto investor?
So the bottom, the few things that will, in my opinion, start to form a bottom. Number one, we have to see people really giving up on Bitcoin. And I'm not saying everyone, but you have to see a good chunk. Just like in 2009, people kind of didn't even want to open their brokerage accounts and see the financials, see their portfolios. I mean, it was really this kind of like the blood in the streets type thing. So I think in bear markets, you have to see that as a bottom. I think another combination factor would be if you get to a point where the Fed not only stops hiking, but also starts lowering rates and going towards quantitative easing again. And then I also think there's other signals, right? So you have maybe piercing 10,000 where a lot of stops. I could see a lot of stops being right below or right at 10,000 on Bitcoin.
Sure.
That flushes out the weak hands. And lastly, I'd look for signals like where does Michael Saylor get squeezed, right? Where is his max pain level? And that may be that bottom point where he finally gets that point. I mean, imagine if I doubt he would ever throw in the towel, but if he was forced to liquidate some of his Bitcoin, that could be a bottoming event. The last thing I would also mention would be we got to get regulation. All right. And I'm not talking about bad regulation. I think in general, assets need to, anyone investing wants to know the rules of the game. And right now in crypto, like no big money's willing to take big stakes because we don't know. Right? What's a security? What's a commodity? What are the rules that these so-called securities have to follow? So without knowing that, it just kind of makes it very kind of iffy in terms of putting a lot of money. Like even myself, I invest in Bitcoin. I have small holdings in Bitcoin, but until I know more, I can't put more money at risk because I don't want to see bad regulation come out and then it drops 50% on me or more. So I think there's a whole host of things, but suffice it to say, price should tell us, meaning that if Bitcoin flushes sharply, we get a reversal sort of bottoming tail on heavy volume. It breaks the 10K. Like, I mean, there should be some clear signals at that point that we hit a bottom.
You know, I having discussions with you over the years, and we're going to shift away from crypto. And by the way, if any of you have any questions for Gareth, please bring them. This is the venue. That's why we're at Trader Summit, is that not only will I be asking questions, but this gives you an opportunity to ask some questions for Gareth as well. But based on our previous conversations, and I don't think things have changed, but I'd love to hear your opinions, obviously, is you are a bull on crypto because, you know, you think there's a time and a place for crypto, and you know, but I'd love for you to expand on that. And if you're a longer term bull, you're waiting for that flush to actually get long. And then going back to my previous question, what would you be buying?
Right. So definitely in this environment, if you're accumulating, you got to stick with the best of breed. So Ethereum and Bitcoin, and mainly because number one, the SEC said that Bitcoin at least is a commodity. So it gives us a little bit of a framework to understand what the rules will be for that. Ethereum, again, is just the use cases. There's so much use case for it. There's so much kind of build out on it that I think that's the one. The other ones, you know, there could be a massive winner in there, but you don't want to commit a ton of capital because if you look back 2 years ago or 3 years ago, if you looked at the top 20 coins, it's very few of them are still in that top 20. Like look at Litecoin, it's fallen way down the list. I mean, and so you just want to be careful. And I think in bear markets, it's where you need to be the most careful because the good will really rise above the rest. So I think that's really important to kind of focus on those main ones.
Yeah, because there's the .com stigma of a lot of these cryptos where, you know, you look back in the .com bubble. I know I've talked about this, you know, in nauseum with a lot of people. It is very reminiscent of it, of the .com era, and you've traded through it. I traded through it. A lot of those names, 90% of those names are just not even in existence. But we did see Amazon came out of that, right? I mean, you know, their Netflix did too. I mean, there's a lot of money to be made in the right crypto names at some point. Is that correct?
100%. So I'm a huge long-term bull in terms of the use case and the need for something like Bitcoin and even Ethereum. Again, I got interested back in like 2011, 2012 in Bitcoin because I saw what the Fed was doing out of the financial crisis. And to me, I couldn't understand how it made sense when I was earning money or trying to create a living, how they could just print money out of thin air. And in theory, that makes my money worth less because there's more dollars out there. And so the idea of Bitcoin made so much sense to me back then. I wish I invested a lot more back then, frankly. But of course, you know, you'd play it safe, and I did play it safe, and I traded in and out of it. But the bottom line is I'm a cycles guy. I'm a chart guy, which means I'm a realist that cycles occur. So you have these mega moves, just like the stock market. You had it in crypto, and then you have bear cycles. And so you can be a long-term bull and still expect a 50, 60, 70, 80% correction in Bitcoin. It's just might as well trade around that.
You know,
Blake, I have a question as well afterwards. No problem.
No, okay, and that's Stelios. We'll bring him in just a minute. But Gareth, I had to ask this because you brought it up, and I thought it's interesting. You know, you came to learn about Bitcoin 2011, 2012. Fed's printing all this money. my money is going to be worthless. But isn't it interesting? Here we are today talking about the dollar hitting 20-year highs against other currencies. Isn't that funny how that thought process couldn't have been? And I'm not saying that you look, we are all in the same boat. We're like, yeah, money printing bad for the dollar. But isn't it ironic how the dollar's at 20-year highs like right now? I mean, it's come off a little bit today, but isn't that crazy?
It is crazy. And I think what's even crazier is that from a crypto perspective, like the big boogeymen in crypto were like, everyone hate the Fed because, crypto's our salvation. And then here we're like, Fed, could you please print some money so the crypto and assets will go up? And the same thing with the dollar. The dollar is going to be worthless, so you got to own Bitcoin. Well, guess what happens? It goes the opposite way as well. So I think it's important to differentiate between your short-term views and your long-term. Like long-term, I'm still very bearish on the dollar. I still think eventually the Fed goes back to what they do best, which is printing us out of recessions or depressions. So I think long-term it makes sense, but in the short term, it makes sense that the dollar strengthened because every other central bank was doing the same thing. And then you could argue that they were doing it even to a bigger extent, like the Bank of Japan. And so we have to remember that the dollar is valued against other currencies versus against a basket of goods. And now we see prices going up quite substantially.
Yeah, for sure. All right, Stelios, so I'm going to turn it over to you for a second.
No worries. No, I just wanted to ask on the following up on Bitcoin. We've seen ever since the introduction of futures, so Bitcoin futures, and particularly this year more, we've seen cryptos and Bitcoin in particular trade a lot more technically, and the volatility has come down. And also it's like a proxy for risk, right? It's like a high beta proxy for the S&P. What do you think about that? And how would that change the way you look at these or the way you trade Bitcoin at least in the near term?
Yeah, so with the addition of Bitcoin futures, you're 100% right. Volatility has come out of it a little bit. And I think that's from more participants, right? You get more participants, you get more institutions involved. So you don't have as wild swings where it's just mom and pops or kids, buying and selling and panicking and pumping and stuff like that. So I think that's a good thing. And that's why I'm really excited that as we get regulation, it's going to bring in more and more big money that, while the crypto community is oftentimes anti-big money, we don't want to get the big banks, the big hedge funds involved. In a weird way, they bring stability, right? They bring, you don't see when the markets drop 10%, all the hedge funds don't dump all their Apple stock, right? Or Apple would crash, so they kind of hold through the craziness while the smaller investor tends to panic and then, chase the runs as well. So I think that's a really good thing. I can't wait till there's a Bitcoin spot ETF. I think that would be even better for the overall market. And I think you just have to get more and more participants to be okay with cryptocurrencies. And then you'll see the stability increase even more.
Understood. I guess the big question is when it does get regulated, how does that change the whole environment? But yeah, I think you're absolutely right.
And I thought, just your comments, Gareth, regarding regulation, when we were having this conversation with Anthony Crudelli the other day, that's really one of my bigger takeaways, because I don't think a lot of people really view it as such. They think a regulation is a bad thing, but when you're an institution, like, oh, look, you're drawing me a sandbox. I know how to play really a freaking good game inside my sandbox. As long as I know it's there, I'm jumping in, right? So once the institutions know these are my parameters, this is what I got to deal with, great. I'm a believer too. I'm in. And so ironically, it might actually bring in more buyers with regulation.
Yeah. And we need, and in all fairness, people that want Bitcoin and think Bitcoin's going to, $250,000, $500,000, $1 million, you got to get the bigger money in there to create that scenario. So I do think that people, you can look at it two ways. You can look at, regulation. They're going to know everything about us because, they're going to regulate it and track every transaction and everything like that. Or you can say, hey, listen, I'm an investor. I'm trying to build wealth for my friend, my family, and my future. And therefore I need more participants to get in here, and you need the regulation for that. And again, even think about like older Americans, right? Even myself, I'm not super old by any stretch, but without FDIC insurance on crypto accounts, there's risks. And especially for older Americans, older people around the world, they click on the wrong link and someone gets in their crypto account and steals all their money. It's gone right now. Like there's no recourse, there's no FDIC insurance. And that's for a lot of people, that's something that will keep them from investing in it.
That's such a great point. Stelios, so did you have any other questions?
On cryptos, no. We can go elsewhere, but yeah.
All right. So I'm gonna before we move away from that, we got a question, excuse me, from Trey. He said energy prices going through the roof and being Bitcoin so energy intense. What is the chance that 100% of the miners cannot make any money and just disappear?
Wow. Oh, wow. So I think the miners themselves, and this is what's interesting here, is that you do go through periods in Bitcoin's history. Like I still remember vividly in 2018, when the price of Bitcoin was at like 3,500, 4,000, even up to like 6,000, it was actually a losing proposition to mine. But I think the positive of that, and by the way, yes, those stocks will get hurt, but it's almost like going through a bear market for a company that's publicly traded. I mean, yeah, they're going to lose money for a couple years, but if they stick with it, the idea, especially behind Bitcoin and the halving, is that eventually it will become profitable to mine again. So the whole goal here would be that they continue on and they keep plowing through, and maybe they're putting a little money aside for the rougher times, and that they can survive and then thrive in the bull markets.
Having said that, though, I mean, isn't it that they've mined already, what is it, 19.5 million of the 21 or something like that? So it's we're getting to the end of the Bitcoin supply, as far as I can see. So and plus it becomes more difficult to mine, right, as more supply gets in. Yeah. Okay. Interesting. Definitely energy. No, I was just going to say, definitely energy prices are affecting in a big way the mining at the moment, at least in the short term.
Good point. Good point.
Yeah. So, well, let's move along to stocks. I mean, and we can actually talk about stocks. We can talk about gold, and we can definitely talk about currencies. But we've seen a nice rally in equities today, and here we are trading above 3,700 right now. What are you looking at as far as the S&P goes and as far as what are you looking at as far as the charts go? Because I'd love to see what your views are, but also more importantly, did you see the turn? Do you think this has legs? Are you going to sell into some strength? How do you feel about the macro environment here? Because I think overall, a lot of people thought that we will see lower levels first before we see some sort of rally. Today may have changed some minds, because there's no better way to change minds than price. I mean, it's the best way to change minds out there. So
number one, I've been generally long here over the last 1 week period, expecting a relief rally to take us at least into the midterms. And I use the midterms in a weird way, just like all election cycles, as if early in the year oil was at 130. I'm like, it's not staying at 130 going into the midterms. They're going to do whatever they have to do to bring it down. And we saw the strategic oil reserve release, as well as other things. But politically, they got to do that. It's only a small area of it. But I also think that, if you looked at the dollar, if you looked at the dollar yen, I mean, there was major stress. And we saw it even develop in the UK with what the Bank of England had to do. Major stress on the global financial system. And for me, as soon as I see that, when I see the dollar yen and the chart go vertical like that, something is going to break, or the central banks have to work together to do it. And what's amazing about today, right? Think about this. You basically had a 1-2 punch where the Wall Street Journal came out and said, hey, the Federal Reserve is going to likely raise by 75 basis points in the next meeting, and then they're going to pivot. All right. So that was the first punch that was given, and the market began to rally back. The second one was that the Bank of Japan then intervened, and we saw this massive decline on an intraday basis on the US dollar yen, the dollar yen. And in fact, let me try to bring it up, JP slide chart here, because I mean, this was just, again, number one, I was short the dollar yen. So that was awesome. I was like, whoa. You don't see currencies move like this, but look at that collapse on the dollar yen on an intraday basis. That's the 10-minute chart. And what that told me is that, and this is what's amazing, is that there was coordination. And I think that's something we have to take. And I think that's something that the market should be bullish on, is that you obviously had this. So the Wall Street Journal, you could say, okay, well, Wall Street Journal, they're just a news source. But in the past, the Fed has used them to convey ideas on what they're going to do on rates. So we have to take that as something serious. And then to see the Bank of England act an hour later, it was definitely a coordinated effort to try to weaken the dollar, strengthen the yen, probably because the Bank of Japan was saying, hey, guys, if this continues, we're going to have major cracks in our system, and I think globally. So that was a really interesting thing, and that basically puts me in line with thinking that we rally up generally into the midterm elections. Afterwards, I'm still in the downside camp. I think we're going to start to see some really negative economic news hit, and I do still think there's further downside.
So what since we are heading into the fall and we're talking about midterm elections, you're also going to deal with seasonality. So does seasonality play into your playbook?
It does a little bit, but not enough to sway me from macro and charts, right? So macro and charts are the forefront. And then if the macro and charts align with the seasonality, then heck yeah, that's like an added bonus. This year, I'm not so sure about the seasonality because again, we have to see how the markets react post the elections, and then where do they end up heading? But I still have us priced in by year end to go down on the S&P 500 to that pre-COVID high. In fact, let me show that chart again because I think it's an important chart to take a look at. But basically, we should head down to, I think it's around 3,300 on the S&P. It would be right here on the spiders, this 337, 338 level. We got close. We didn't get there. If I just had to do some simple charting on where I think this bounce is going to go, take the COVID low to this pivot. And I think that's where we're headed in the next week or two going into the midterms on the spiders. So you're talking like 385, 386, another $13 or about 130 points on the S&P 500. But once we get there, I think you have to start looking for further downside again.
Interesting. To coincide with what you're talking about with the stock market, can you take a look at gold? Because we had Valerie just asked, was there a bottom in gold? And I know we're talking about the dollar, and you're going to see that that trade probably inverse. But what do you think about gold here?
Yeah, so I am heavily long gold. It's actually my biggest position right now. So I am bullish on gold. And I think the key on me getting more and more bullish and adding to my position is the fact that we're getting closer to this pivot, right? So we've seen the dollar get ridiculously strong to the point where, to me, it's looking like it's due for a reversal. And then we have the potential of this pivot coming in with the Fed, which again, remember, a pivot, it doesn't mean they're going to start lowering interest rates. It's just where they're not going to raise it anymore. But just that alone should weaken the dollar, which will then help gold. And I think as the economy slips worse into a recession, number one, and then into a worse recession, money is going to start to look for places to go, right? So you're going to say, okay, well, as we get into a recession, all these earnings estimates have to come down. And the worse it gets, they're going to come down more and more. So stocks probably do continue lower, even in the face of a Fed pivot. But then the question is, well, where do you put your money? Well, you have Bitcoin, but that's still risky. And then gold is going to probably be that main recipient. So I think the low on gold should coincide right around here with the Fed, with a Fed pivot. And then as the Fed gets more lenient over time, as the economy spins into a worse recession, gold should do better and better.
It's interesting, Gareth, because you look at the inflationary environment that we're in, and you and I started trading probably right around the same time. And the only thing that we've heard about gold our whole career was, gold's a great inflation hedge, but it's been obviously opposite of that,
right?
Because of the dollar, right? So, but if you're seeing a bottom in you're seeing a bottom in gold, or you're seeing some support in gold, that must mean you believe that the dollar top is near.
Yeah, I do. I really do. And I think that's going to coincide with the pivot of the Federal Reserve. And one thing I'd love to show here, this is just a cool history lesson, is to go back in the 1970s when the last time we had this high inflation going on. And so you think about inflation, and really it started around in the 70s, it was around 75 into the early 80s. And what we saw is leading into 75, in that early portion, the markets were anticipating inflation. And so we saw gold rally up here beautifully. And then once we got that inflation, gold actually started to pull back and kind of flag. This is what we would refer to as like a bull flag. And then later in the 70s, around 77 or so, the next big move in gold has started, and that was the mega move to the upside. And so if you look at this, right, we basically have, let me just draw some trend lines here. This is what I would refer to as, in the near term, 2018 to 2020. And in here, it was 72 to 74. So about 2 years of upside. Then you had about 2 years of consolidation, and then the big blast higher like this. Well, if we go back, let's speed forward, and let's look at the chart here. And basically what you have is that same sort of thing where you had from 2000 right here. Well, this is even a little bit further, but let's just talk about this shorter term. You have the 2-year move up from 2018 up here. Then you have the 2 years of consolidation. And then I'm guessing we have that big breakout coming over the next few years, where I think gold, honestly, easily to $3,000, $4,000, $5,000 an ounce. So it's actually my favorite multi-year play, mirroring the 1970s, as the 1970s into the 80s is the closest parallel we have in terms of extended inflation.
If I can add one thing, there's so many people who doubt gold, and they say, oh, look, it's an inflation hedge, but what is it doing now? It's dropping. If you go back to 2008, the market crash, well, when everything gets sold, gold gets sold too. So if you look at 2008 gold, I think it went down like 35%, and then massive move higher, right? So this is what's happening now, in my opinion. You know, the short-term reaction to dollar strengthening, higher yields, is for risk to get sold, and with that everything gets sold. So gold's going down, like you correctly say, but it looks like it's this consolidation phase that you pointed out before, waiting for the next leg, which I think is higher. So I agree with you.
Yeah. I think that's exactly what's happening here. And again, it makes a lot of sense if you think on the macro basis of the steps that are going to be taken. So you've had this rising rate environment, which has strengthened the dollar. So that's what's been putting pressure. But remember, the dollar rallied 20%, and gold, what was gold down this year on a 20% rally in the dollar? Like 7%. So to me, I look at that and I'm like, wait a minute, shouldn't gold have been down 20% if the dollar was up 20? And it wasn't. So that's got to tell you something, right? That's got to tell you there's obviously a positive divergence, or at least some big money accumulating on gold. And I'm a big fan of like these underlying big money accumulations, the ones that aren't being talked about. You don't have big funds saying, hey, everyone accumulate gold, because then it wouldn't be the gold accumulation. It's when they do it in silence that you have to pay attention.
Yep. What's your view on silver? We have a friend here asking, and I'm particularly interested in silver as well, with the increasing use in in modern technology and solar panels and EVs and all that. What's your view on silver?
Yeah, I actually do continue to like silver. Again, it's a little of a trickier one because of the industrial side, right? So everyone, keep in mind, silver has two sides to it versus gold really has one side. Gold protects you. It's where people go for safety. It's an inflation hedge. But silver is an inflation hedge, but it's also an industrial metal used, like you said, solar panels, EVs, etc. So if we saw a big slowdown in the global macro economy, then you could look at saying, okay, well, how does silver perform being also a store of safety? And so that's where it gets a little trickier. Having said that, silver is into a huge amount of support here. It's really come in substantially. And if you look at gold, right, what percentage drop has gold seen? Again, this year, 7% or whatever it is. On silver, it's way more. I mean, it's about 33% drop from the highs here. Well, this is from 2020 highs, but still, that's a big drop comparatively to gold. But look at the levels you're now hitting here. You're hitting all these support lines down here going back to 2017, and you could even extend it back to 2014, and even right here. I mean, look at this. So if there's ever a technical level on silver, this is it. And so I'm actually long silver, not as heavily as gold, but I am long some silver here.
Yeah, it seems to be an area of interest there, and I guess you're right. It will depend on the economy and how deep the recession is, or if we get into depression, obviously that's going to be even worse. But looking at things like the gold silver ratio, which is at it's not at all-time highs, but historically it's at high levels. I mean, if gold starts to outperform, I find it hard to see silver not following. Maybe not at the same pace, but it's in my opinion, I think it should be following.
And just a side note here that's kind of interesting on silver is, like, let's not forget that on silver, if you go back, I believe it was in 2008, the bottom was in around $8.75, and we had this mega bull run to $50 an ounce. And so you could argue that from the collapse of 08, 09, you saw this kind of rush into that metal. And if we are going to go into something more dramatic than just a minor recession, that maybe ultimately silver is on the verge a couple years away from a mega spike again. So I think it's worth having some investments in there.
Yep, absolutely.
That's that would be, I know that would make Stelios happy. Hey, so
I like
Gareth,
silver.
yeah, he does. He's definitely a silver bull. Let's talk about like today's market and equities. You know, we're seeing this rally, but I want to go back over to the macro point of view and the markets where we're at right now. So how do you feel about the Fed? I know you like to you love to marry technicals with kind of a macro backdrop. Right now we have the Fed that seems like they are hell bent on continuing to raise rates. I know market expectations for the terminal rate have come off a little bit today, but not really much. I mean, it's still just sub 5%, but the market's still looking at 5%. So do you think that the equity market bounce can really sustain too long if the Fed is continuously staying hawkish and they're going to continuously raise rates? I mean, what are your thoughts there?
No, I mean, if they continue to raise rates, there's no way the markets can fight that. And again, keep in mind that a lot of people don't quite understand the parallel between bonds and the stock market. But as yields rise, as interest rates rise, what it does is it coaxes some money out into bonds because people say, hey, for risk-free, I can get, now on the 10-year, you can get 4.2, 4.3%, whatever it is right now. And so the higher it goes, it pulls money away from risk assets, which as we say, it's a risk asset. You can lose money investing or you can make money. So I think, again, the higher rates go, you have to reduce the price on stocks or the levels on stocks. But the question is, we know the market is forward thinking, right? So as soon as the market smells that pivot where they're going to stop hiking, that's where that rally starts. So I think that's what we're watching for now is like, is this some real stuff that we can sink our teeth in from the Wall Street Journal commentary today about the Fed pivoting after the November hike. And I think the biggest thing is now looking at economic activity, right? So we have to start looking at all these economic numbers even more closely to see, does it give the Fed that reason to pivot at this point to at least stop hiking rates? And I do think, I've been shocked at how strong the jobs numbers have stayed, considering that, every day I'm hearing about like Intel now is going to lay off 10% of their workforce, I heard, over the next few months. There's so many companies laying off, but it hasn't filtered in. I do eventually think it does, and we see a pretty steep drop off in the economic activity.
It's funny. I was just having a conversation a little bit earlier, and I know some of our listeners were tuned in. A friend of mine that works for Intel is like, lay me off and give me the payout or the what do they call it? I'm sorry, it's late in the day for me. But just
severance package.
Give me the severance package. I'll gladly take it because I'm on my way out anyway. So it's gonna, but Danielle's saying that it could still take a long time for that to even feed through some of these layoffs from some of these bigger names. But you're right.
Economic data does matter. Severance and go trade crypto.
Right. They're going to go start buying Bitcoin at the wrong time. Now, you got the attention of some people because we got multiple questions on this going back to crypto. You said something about FDIC insurance. And I think a lot of people were like, wait a second. Do you really think that banks could insure, with FDIC insurance, your crypto investments? Do you really believe that?
I don't necessarily know if it's going to be FDIC insurance per se, but what I do know is that the crypto industry needs something like it. So it could be in a different form. It could be just insurance that is paid for by the exchanges or the brokers, but you have to have that. I know multiple people that have had their SIM cards. In fact, that happened to me. My SIM card was jacked out of my phone without my knowledge. And before you knew it, they got into one of my crypto accounts. Luckily, it was an unfunded one at the time, but I had someone who that happened to, and they took all his Bitcoin and it was done. He lost everything. And so I think people have to realize that risk is out there, that things can happen and there's no recourse at this point. You don't see that recourse. Now, if the exchanges get hacked, I believe they have insurance for that. But if it's from you personally doing something, clicking the wrong link in an email or whatever it is, it's gone. Versus in a bank account, they will make you whole again.
That's interesting. Last time I was at Stelios' house, I sneaked a couple bars of gold, and he didn't notice. And guess what? Banks aren't going to insure that one either.
That's because he has so many bars of gold. He doesn't even notice a couple missing.
This
is the stuff that scares me with crypto. Is that you hear the stories about stuff getting stolen. Maybe I'm too old for this, but it just scares me.
I don't blame you, man. It is the Wild West still. And I think this is important, is that people have to understand that that crypto is very new. And so it's basically, crypto reminds me right now of what it's gone through from the 80s with like Jordan Belfort and the pump and dumps going on in the 80s with these micro caps. It's really much the same. And so you think about where the US stock market has come from that in terms of regulating and punishing. And that's where crypto has to come to kind of weed out all this shadiness. Because I mean, think about the bankruptcies we've seen from, you know, all these different things, Terra Luna collapse. There has to be some sort of safeguards put in.
That's true. That's scary. And you know, I don't know about you, Gareth, but I don't feel like that was the last one that we're going to see.
No, I don't either.
Yeah,
I think,
right. Well,
and I think one of the things is, and this is going to be key, is that if Bitcoin does break below the recent lows, I bet you there were some companies on the verge when we were down at 17.5, and then we got that bounce, and they were like, okay, we're okay. But the question is, if you hit 15 or 12, you're going to see a lot more coming out of the woodwork.
Hey, I believe and agree with you on that. You know, before we kind of wrap things up, we've got about 5 more minutes. I did have some questions for you regarding the dollar. Do you mind taking a look at the dollar index and giving us a view? Some people are chiming in saying they don't think we're going to see 120 yet, or we're not going to see 120. You know, and I know you also feel that we are maybe longer term more of a dollar. You're more of a dollar bear. Is this it? Or does the dollar have some further distance to go before it finally turns?
Wow, that is a good question. I definitely, if I had to take a side, I would be on the short side of the US dollar for the next 6, 12, 18 months. Doesn't mean it can't go up a little bit more. I mean, if we see some more craziness, but I do think that the Federal Reserve is very aware. And I think other central banks like the Bank of England, Bank of Japan, they are basically knocking at the Fed's door saying, you are literally going to break us as a financial institution and system. And so I think the Fed is very aware of that. The dramatic rise in the dollar, the speed at which it's risen has put a lot of pressure on things. And from a charting perspective, you know, this is really what I'm watching here, at least in the near term. I'll show it to you guys, is that you basically, this is the beauty of charts, right? We can connect these highs. So high to high to high gives you this high. Now we've made a lower high, but we haven't made a lower low. One of the things to watch is there's a short-term daily trend line that we tagged today. Pivot low to pivot low to pivot low here. If this breaks, then that should give us another leg down on the US dollar. Right now, it tested it today, but it didn't break. So next week, watch that line. You start trading below that line, you'll get another move down, and you'll probably see a lower low on the dollar, which would be very, very good for the equity markets and for Bitcoin as well. I'm in the camp that that's going to happen. I think there's way too much money, and this is going back to the psychology of investing and when you have too much money on one side, but it seems like everyone is on that bullish side of the dollar. And to me, that starts to be a warning signal, just like when Bitcoin was at the highs and so forth. All
right. Well, Gareth, I love spending time with you, and I know Stelios probably had a great time talking silver with you and gold. And
I definitely had a great time listening.
Yeah, Steve loved to listen. But I wanted to ask you about you know, as a trader, I know there's a lot of traders that know exactly who you are. They've been following you around. They're probably knocking on or waving hello when you were in Dubai last week.
Yeah.
But how do traders follow your work at what you do at inthemoneystocks.com?
Yeah, basically what I do is I just run a subscription service where people can subscribe and they get access to all my daily, I do a daily video with this full technical recap of gold, oil, the dollar, the stocks, and everything like that. And I basically, when I get a trade signal that's a high percentage technical setup, I post it up and people can follow those, and they've done very, very well there. So I think that's the coolest thing about it, is like it's me behind the driver's seat kind of guiding people. And then the only other thing I would mention, and this is like the most important to me, it's like my kind of life work, is that it's all about education, right? Give a man a fish, feed him for a day, teach a man to fish, feed him for life. And I started this, I created this educational series. It's called the Winning Trader series, and it can be found at verifiedinvestingeducation.com. And it's basically 20 years of knowledge, of charting, of everything made into simple forms where anyone can learn it. And it's everything in there that I know, and I'm proud of it. It's 20 hours of content of me on screen teaching, and it's right there for everyone now.
All right. Well, Gareth, I tell you, I always enjoy having you here, and I enjoy your enthusiasm about another low in crypto. We're all waiting pins and needles for that, and I know some people maybe are not, but hey, look, I'm looking like you. I'm looking to buy on a big, nice flush out of the market. So I hope other people are waiting patiently as well, and we'll hope you'll be right, like you were right for this last year on crypto. I want to thank you for spending your valuable time with us here at the Traders Summit, and look to talk to you again here in the near future.
Yeah, I look forward to it, Blake. Thank you guys for having me.
Thank you, Gareth.
Thank you, Gareth.
Thank you.
Always
All
a
right,
pleasure.